PayPal stock, there's an absolutely massive fundamental change that is about to transpire in regards to the business model of PayPal. In today's video, I want to explain in depth exactly what's going on here and how this is going to impact PayPal's numbers significantly in the future and why it matters so much for this company. NVIDIA, this stock continues to roar. It was up another 7 percentage points here today. We're going to talk about, is this stock easy money into the stock split? Could you get another easy 10, 20% on the stock over the next 2 to 3 weeks? There's a lot of people wondering that, talking about that. I see that out there. So we'll speak about that in this video, okay? We're also going to speak about this. This is big tech's AI CapEx costs. I think that's very important to understand this whole situation. And then where is sell in May and go away? Sell in May, go away. Famous expression in the market, right? And it's nowhere to be found. May, the stock market's booming. The S&P 500 is already up 5% plus this month. The NASDAQ's already up over 8 percentage points this month. It's booming, right? Where is this sell in May and go away? Those are the 4 core subjects we're going to speak about here today. All I ask in return is that you hit that like button and you make sure you're subscribed here to the channel. If you're wondering why I'm talking so quiet, it's because my baby is asleep in the room next door. And I don't want him to wake up because he's a little 2-year-old. And man, if he wakes up cranky. So we're going to keep it quiet, kind of like this PayPal news, okay? If you're looking to apply to join my private group and get access to that this week or next week, then check out the pinned comment down there. Click on that, fill out your application, okay? Alrighty, so PayPal. This stock obviously hasn't done a dang thing this year in terms of the stock price, right? The fundamentals of the company are looking very good, never mind this massive change that's about to come that we're going to talk about, right? But the stock price hasn't done a thing. It's up 1.5%. So it's underperformed the stock market so far this year, right? Well, things are about to get a whole lot better in regards to PayPal's stock price and in regards to the fundamentals of the company. Here's what we have going on, and this is why it matters significantly. Out of the Wall Street Journal here just hours ago, PayPal is planning an ad business using data of its millions of shoppers, and we know PayPal has hundreds of millions of people using either PayPal or Venmo. Payments company hires Uber's former head of advertising to run the new ad division. PayPal hopes to boost its growth by starting an ad network juiced with something it already owns. Data of its millions, I don't know why they keep saying millions of users, hundreds of millions of users. The digital payments company plans to build an ad sales business around reams of data it generates from tracking the purchases as well as the broader spending behaviors of hundreds of millions of consumers who uses its service, which include more socially enabled Venmo app. PayPal has hired Mark, who formerly led Uber's advertising business, to lead the effort as senior vice president and general manager of its newly created PayPal ad division. Listen, Alex Chris, he is showing off left and right, okay? Not just in regards to these new businesses and getting their old businesses supercharged, right? But in bringing in talent on talent on talent. It's incredible. In his new role, he will be responsible for developing new ad formats, overseeing sales and hiring staff to fill out the division. PayPal in January introduced Advanced Offers, its first ad product, which uses artificial intelligence in the company's data to help merchants target PayPal users with discounts and other personalized promotions. Advanced Offers only charges advertisers when consumers make a purchase. Online marketplaces eBay and Zazzle have begun testing it, according to PayPal spokesman. But PayPal now aims to sell ads not only to its customers, but to so-called non-endemic advertisers, or those who don't sell products or services through PayPal. Those companies might use PayPal data to target consumers with ads that could be displayed elsewhere. For instance, on other websites or connected TV sets. PayPal processed 6.5 billion payments by approximately 400 million, thank you for mentioning the number now, 400 million customers in the first quarter, according to its most recent earnings. Quote, if you're someone who's buying product on the web, we know who is buying the products where, and we can leverage that data, said Mark. Consumers who use PayPal credit card would also provide the company with data from real-world brick-and-mortar stores as well. Apart from its data-driven ads, PayPal has also begun running some untargeted merchant offers on Venmo, the spokesman said. The company, however, wants to avoid alienated younger users who see Venmo as sort of a social network. I don't know how much we're going to go into that, okay? By overwhelming them with promotions. Many companies have built or are beginning to build ad networks to leverage data they already have from their customers to target ads for outside marketers. PayPal, like other businesses that process transactions of all sorts, might eventually demand higher ad rates than some retailers' ad networks do, because it can provide a more detailed picture of the people advertisers are targeting, according to this gentleman that's a leader of this consulting company, right? For instance, PayPal might group consumers by their relative affluence or their status as business travelers, right? They've got an immense amount of data, and their data could be worth a lot more than just general data because they're seeing the whole process through to actually the payment being made, right? Very, very valuable. Now, this is significant for the stock price and the fundamentals of the company moving forward, okay? Let me start by saying this. Did you guys see how many people picked up this article over the last several hours, right? Wall Street Journal ran that piece 11 hours ago. Then The Verge ran a piece 2 hours ago. Barron's picked it up 7 hours ago. MarketWatch picked it up 9 hours ago. Payments picked it up 3 hours ago. The Independent picked it up. I'm seeing just website after website picking up this. So this is going to get a lot of attention out there in general, which definitely can be very helpful for the stock price as people realize, oh my gosh, this is a new huge business opportunity for PayPal here. Now, when you look, right, a stock like I own, Amazon, their advertising business, no one even thought about their advertising business 10 years ago, right? Now you really think about Amazon's advertising business. They keep taking market share from Google and Meta, right? And Google and Meta continue to grow their businesses bigger. It's just the pace of growth of Amazon is much faster, right? They're supposed to grab about 15% of the advertising market share by 2025. Now, in regards to Amazon, right, their advertising business should be at a run rate of $50 billion plus a year, which is massive, right? Keep in mind that's Amazon's third biggest business. Their e-commerce business and AWS dwarf this number. But $50 billion plus a year in ad business, for reference, PayPal's entire revenue last year was under $30 billion. So think about how big of an opportunity this is for PayPal, right? And so here's where the question begins. Is this like $1 billion a year opportunity in terms of revenue? If it is, that's going to help out, PayPal's revenue by 3% plus a year, right? Is it like a $3 billion a year type opportunity? Then we're talking 10% help, right? Is it more like a $5 billion a year opportunity? Then it's like a 15% plus help to the top line. Is it a $10 billion plus a year opportunity? Then that's like 30% plus help to the top line. Is it like a $15 billion a year opportunity? Then it's like 50% help to the top line, right? And I think that's a real question. There's no question in regards to this business long term as far as it's $1 billion plus opportunity. There's just a question of how many billions of dollars. If it was only a couple $100 million opportunity, Alex Chris wouldn't even go after this. He understands this is likely a multi-billion dollar opportunity. It's just the only question is how many billions of dollars opportunity is this over the long term, right? Is this something that tomorrow massively changes PayPal numbers? No. But if you run the projections on what this does for PayPal's business model over the next 5 years, 7 years, 10 years, yes, it fundamentally changes the numbers for PayPal massively. But here's why it's much bigger, okay? Whatever you see in the top line, the number is going to be dwarfed on the bottom line in terms of a percentage how much it helps the business. Because remember, an advertising business is the creme de la creme, right? It's the most profitable, especially when you're going to be using a lot of AI. It's not like PayPal, oh shoot, we need to go hire another 10,000 employees to run this ad business. No, they don't need to do that. A lot of this is going to be systems that are already set up for customers running AI, and it's going to be a lot of self-service. So therefore, the business model is going to be incredibly profitable. So here's kind of how to think about this. Let's say this is a $10 billion a year business long term, right, in terms of revenue. It could likely help the bottom line, the net income of the company, by $5 billion. It could easily do like a 50% net margin for this particular business overall, because it's not like they're going to need to go crazy with employees. They obviously have their corporate tax rate, 21%, right? If it even got moved to 28%, okay, you can take that out. Let's say they add more systems and employees, then you got a couple $1 billion there. You're still in the plus like $5 billion a year on the bottom line. Now here's where this matters so significantly, because if you look at PayPal's bottom line, their net income, last year they did $4.2 billion of net income. So think about this. If they could build this into a business that's doing $10 billion a year top line, it's throwing off $5 billion to the bottom line, that's more than the company's entire net income today. The entire net income. But it goes bigger than that. It goes even bigger than that, folks, okay? Here's the deal. PayPal's valuation is a complete joke. The company trades, we're looking at 1000xstocks.com. This is my service, right? And we're looking at a company that trades at a 13 forward P. If you think about other advertising giants, Amazon, Google, companies like that, we're talking about 24 forward P to 42, right? PayPal is going back to a forward P of 30, in my opinion. That's where it's headed. That's where the company, when you look at how sticky the business model is, when you think about being a fintech, when you also think about the growth rates this company's going to be putting up, and then an advertising company on top, we're going back to like a forward P of like 30. So you're going to get a massive more multiple for the stock over the coming years as that advertising business builds out and people realize, oh my gosh, like this is going to become very, very valuable. It's not going to happen overnight. It's not like PayPal's going to go from a 13 forward P to a 26 or a 32 tomorrow. It happens over the next several years as that business starts to get built more and more and people realize, oh my gosh, look at the growth rates this company's putting up. Look at that advertising business, right? And so therefore you get a massive stock price gain, not just because the company's revenues and net income are going up like they are going up, right? But also simultaneously you're going to get a big premium on valuation that's going to come into the stock over once again, the next several years. It's not like it just happens overnight. It's over a given period of time, right? Kind of like Apple. Apple used to trade at a forward P. I mean, I watched Apple years ago trade at forward Ps of like 12, 13, 14. And then you look at Apple today, even though a lot of the growth is gone, it trades at forward Ps of like 25, if not 30, right? And the reason being is now it has a services business that is very respected. Whereas if you go back 7, 10 years ago, the services business was just not respected like that, right? So we're going to see that. Now, next thing is up here is the man's on a freaking mission. I mean, Alex Chris is on a mission. I can't believe how much progress this man has made in such a short amount of time. Remember, he just started with this company back in the fall time. And here we are in the spring. It hasn't even been close to a full year with him at the company. And I'm just looking at the numbers and how much better the fundamentals of the company are getting, despite the very challenging macro, right? And I'm looking at all the new products and services they're working on. I'm blown away. And this man said many months ago, prepare to be shocked. I don't think enough people realize what's going on at PayPal. And I think over time they're going to realize, and they'll realize, the thing that will make them realize more and more is when the stock starts to move. When all of a sudden this is an $80 stock, $100 stock, $120 stock, more and more people are going to start to realize what's actually going on here in the company. And all these things I'm talking about today, and I'm explaining, what's going to happen 6 months from now, 12 months from now, 18 months from now, people will start to realize that. All these things I'm talking about right now. And then all these things I'm talking to you guys about right now, analysts are going to be talking about this stuff 6 months from now, 9 months from now, 12 months from now, 18 months from now. You're here listening to me. I'm just laying out the future for you and what's going to transpire. And the more the stock price starts to appreciate over the next 6, 12, 18 months, the more people are going to start to wake up to this story and start, oh my gosh, PayPal, there's stuff going on here. Oh, they got this going on. They got that going on, right? It's a process. It's a whole process. And I'm just the guy that's here to break the news before the news is really broken on how all this stuff is going to play out. And then everybody will pick up that over this next 6, 12 months, okay? So that's the moral of the story. Alex Chris, well freaking done, man. You are doing very, very well. I am very, very happy with that man as CEO. Holy smokes. That's no joke. NVIDIA. Is this stock easy money over the next couple weeks here, okay? The next 2 to 3 weeks, right? A lot of people are looking at this and like, dude, this is an easy another 10, 20% gain in a matter of 2 to 3 weeks. And the way a lot of people think about that is they think, I can get 8% roughly a year in the S&P 500, but if I can get 10 to 20% in 2 to 3 weeks, whoo, baby, that's very attractive, right? And so that's kind of the thought process. That's what's going on here in regards to NVIDIA, okay? Let me lay it out to you like this in kind of my opinions on if NVIDIA is easy money or not, okay? So We know the stock split was announced, right? Now, basically, in terms of the actual stock split going through, it starts next week on Thursday, and then it goes all the way through to Monday, June 10th, right? And then after that, the stock is already split. It's going to be $100-something a share, right? Which is going to make it much more accessible to a lot of folks that maybe want to play options in regards to NVIDIA, smaller investors, right? Employees that want to make moves in regards to NVIDIA stock. So it kind of helps out all that, right? So this is a game that's going to go into next week and into the following week, right? Now, if we look back, NVIDIA reminds me a lot of Tesla back in kind of, the back half of 2020, right? Tesla was the talk of the market. Now, NVIDIA is much more successful and much more respected and talked about than Tesla was in those days. So do keep in mind, NVIDIA is like another level up, right? It's another level up of like respect and like, oh my gosh, look at these numbers and look at how big this opportunity is. And Wall Street talking about them and things like that. It's a whole other level up than Tesla. But it's the next closest thing to this was back when Tesla split, right? Which was, that was a 2020 split is the one I'm specifically talking about. Tesla stock split a few times over the years, but this is the one I'm specifically talking about. In Tesla, in that situation, they announced a 5-to-1 split. Now, this is a 10-to-1 split for NVIDIA, right? So even much more impactful. Now, when that news broke, that was August 11th, 2020. And basically, everything was kind of finished up at the end of August. Now, what happened with Tesla stock price over that time? Well, here's what happened, okay? The stock went beast mode. Absolutely incredible. This is when the stock split was announced, and very shortly after, it already gained 30+%. Literally a couple of weeks later, it was already 30% plus gain. By the time the stock split was finished, the stock went up over 25 percentage points from the time the announcement came out to the actual split, right? And remember, NVIDIA is another level up. Another level up of like the numbers being even more phenomenal, the respect being even more phenomenal, long-term opportunity being what is seen as even bigger, right? In Wall Street, even respecting NVIDIA on a lot higher level than certainly they respected Tesla back in those days, right? So all that simultaneous, right? So the moral of the story is the stock's likely going a lot higher. Now, also on top of that, I reacted to a few videos on the reaction channel here today. If you don't follow me on the reaction channel, it's called Jeremy Lefebvre Makes Money, right? And I react to a bunch of different content, videos, articles, things like that on that channel. It's all reaction, right? Now, on that video, I was reacting to a woman that was talking about NVIDIA's on its way to a $10 trillion market cap, which is a number I mentioned a couple of years ago, that long-term NVIDIA probably could be a $10 trillion type company, right? But these are sorts of comments that when Wall Streeters start making them, you're starting to get into a hype cycle in regards to a stock, right? Now, NVIDIA, believe it or not, the stock price is not in a hype cycle. It's not. The excitement over the product and in terms of how many customers want to order it, that's in a hype cycle. But in terms of stock's valuation, the hype cycle hasn't even really begun yet. If you look at the forward PE of NVIDIA, it's trading at a 47 forward PE, which is, you can call it 2x the market or a little over 2x the market. But the company is growing way above 2x the average stock in the market. So the fact is NVIDIA should be trading at far more of a premium than where it's trading at right now. For instance, you want to know where Tesla's PE was back then? So keep in mind, NVIDIA's at a trailing 12-month PE of 65, okay? 65. Look at Tesla back in their hype cycle. Check this out. Oh my gosh, okay? September 30th, 2020, the PE ratio was over 800. Over 800 on Tesla, right? Prior to the stock split announcement and all that, the PE ratio was over 500 on Tesla. So, the moral of the story is, right, high PEs are when PE ratios are in the hundreds. NVIDIA is not even there right now. So if you're wondering, does a stock have more room to go here, not even just based upon the fundamentals, if we're just talking about a hype cycle, yes. That's why I say in regards to NVIDIA, it might starting, I think like today I actually feel like the hype cycle might be starting in regards to NVIDIA's stock price. But the whole move for NVIDIA stock so far is fundamental based. It's numbers based. The company's put up ridiculous revenue growth and astronomical net income growth and earnings per share growth. It deserves the premium it's getting. But it deserves a lot more. So this is some food for thought that if you're thinking like, is this run over? Likely not. We're likely going quite a bit higher here in the short term, right? Now, also, I did speak recently about I might consider cashing NVIDIA shares if this stock continues to go beast into the stock split and after the stock split, right? I might consider it, right? And the thing that's important to remember about that thought process, right? I spoke extensively about a ton of stocks that I look at as opportunities in the market in that video yesterday and ones I might want to get out of. But in regards to NVIDIA, here's the deal, okay? If I move money out of NVIDIA, it's not because I don't believe in NVIDIA anymore. It's just because there's, in my opinion, better opportunities in the market, right? And so when I look at it from that standpoint, it's a different kind of frame of mind, right? Years ago, I sold Apple stock and I moved that money into Tesla stock, and I can tell you, it was a very, very, very wise decision to go ahead and do that. It didn't mean Apple was a bad company. It was just Tesla was an extraordinary opportunity, right? Now, check this out, okay? Here's the deal with NVIDIA's fundamentals. All these companies are spending a ton of money. They're already going to be gearing up to spend a fortune next year, even more money. NVIDIA's fundamentals are set. They're going to get better for the remainder of this year, and they're going to get even better next year, okay, in 2025. So that's an important thing to understand. The fundamentals are going to get better as this year goes on, and they're going to get even another level better next year. With that being said, very important everybody understands that the stock price for NVIDIA could peak and likely will peak well before the fundamentals of the company peak. So if I went back to Tesla, right? Tesla fundamentals actually were getting better for the first half of 2022. But the stock price had already peaked back in 2021, okay? And so keep that in mind, that we could be in a situation where NVIDIA's stock price peaks at some point this year. Maybe it's in a few weeks from now, or maybe it's toward the end of the year, right? Maybe on a split adjusted basis, NVIDIA's trading $2,000 a share, right? Is it out of the realm of possibility? I don't think so. It's a possibility. It's a realistic possibility. And so that would mean it would be about $200 if you adjust for the split, right? That's possible. Or maybe it tops out, if you adjust for the split, maybe it tops out at 125, 135 here. But the fundamentals just keep getting better, but people kind of price in the future already, right? And so that's what could happen if the stock continues to run. People just kind of start to price in the future. And then you could look at a fundamental story that gets even better, even higher revenues, even more net income, 2025. But then maybe the fundamentals slip in 2026 and 2027, right? But the stock will have already peaked well before that. Stocks usually peak significantly before, especially for popular stocks that are very talked about, like in NVIDIA, they usually peak many quarters before their business model peaks. So it's just a little food for thought in regards to that, right? So that, that's an important subject that everybody kind of understands all the games that are being played behind the scenes. Now, if you want to hold NVIDIA for the next 10 years, then I definitely understand, right? It's just I'm kind of looking out there and I'm like, dang, I could make a lot of money off this stock. I'll probably regret selling it. I wouldn't be surprised because it might end up becoming a $10 trillion company. It might. If I do cash, and that's a big question, if I do cash, but my thing is there's other opportunities in this market that I think have even more growth than NVIDIA over the next 5-10 years, right? So just a little food for thought in regards to that. Now, what is going on in this market? It's beasting, okay? Where is the sell in May and go away? The S&P 500 is up 5+% this month. NASDAQ's up over 8%. So people are looking like the whole sell in May and go away. Maybe we should change it to, buy in May and hold. Like maybe that should be the new expression. There's a confluence of factors going on here. And let me explain exactly what's transpiring, okay? First off, the S&P 500 and the Dow and the Russell did very bad last month. The S&P 500 fell 4.2%. The Dow Jones Industrial Average was down 5% last month. And the Russell fell over 7 percentage points last month, right? So it wasn't like last month was a great month. It seemed like people front ran a little bit the whole sell in May and go away. That's what it comes across, right? Which this market, everybody knows about all these famous sayings and stuff like that nowadays, right? It's not like this is hidden news. Like anybody that's been in the market any amount of time knows about the whole sell in May and go away expression, right? And so sometimes people are like, they front run it, right? So if they really want to do the whole sell in May and go away thing, right? They do it, but they don't say, let me wait till May. They say, let me go ahead, let me do it in April. Let me get ahead of this by a month, right? So a little food for thought in regards to that. Secondly here, listen, people are very worried about boogeymen, right? And then all these tech companies started coming out at the very end of April and then, the first few weeks of May. And guess what? We got no boogeyman from all these stocks that matter. Meta, do we have a boogeyman? No. Do we have one with Tesla? No, the numbers aren't good in regards to Tesla right now in the short term, but it's not like so bad that people are like, oh my gosh, it's like so much worse than we thought. It's kind of what we thought, right? Amazon, there's no boogeyman. Palantir, there's no boogeyman, right? And Palantir's doesn't matter as much to the market in terms of market cap and weighting and things like that because it's a much smaller company, but it does actually matter significantly to the investor psyche. And I can tell you the story around Palantir is very, very exciting. So there's no boogeyman in regards to Palantir. And then NVIDIA, right? The biggest, most important stock in the market. I mean, there's no boogeyman in regards to NVIDIA either. So you just kind of like, if you were really scared about corporate earnings tanking, bunch of the big dog companies missing, you just didn't get it. Most of these companies end up beating numbers. I think Tesla's one of the few that actually missed numbers from stocks that mattered significantly in the market, right? Now, additionally, inflation's one of the market's looking at inflation numbers with a huge emphasis month after month after month, right? And so numbers came out a little over 2 weeks ago in regards to CPI numbers, and it looks like things are starting to improve, right? At least you can't get too excited about this, but it has improved on a month over month basis. So if you look at the percentage, we were kind of moving up as far as month over month. As far as inflation, that obviously dropped significantly, right? We also dropped CPI as a total percent up year over year, as that number dropped as well. And then additionally, if you look here at the point gain for month over month, it was a +2 there, roughly. It was a +2 there, and this latest month was a +1.2. So that's a significant difference, okay? So inflation is not as much of a worry, which is why you see many of these stocks rebounding heavily this month. Because now people are like, oh, you know what? Maybe the Fed will be able to lower later this year. And, we don't have to worry about rate hikes or any of that, right? So just a little food for thought in regards to that. Next up here, I would just say there's a lot of overconfidence in terms of the bulls and the bears and what they think is going to happen in the market. The bulls get way too confident about where they think the market's going to head in the short term. The bears get way too confident, and both sides just get way too confident. And all it takes is an inflation number to move against you, and your whole bear thesis or bull thesis gets moved out of the way. Like, let's say next month CPI comes in at, which it probably won't, but let's just say hypothetically, CPI comes in at 3.6. If you're a bull on the short term, you're going to get wrecked because then everybody's going to freak out. If we get a CPI at 3.6, 3.7, people are going to freak out, right? They're going to sell off the market. They're going to be talking about rate hikes. They're going to be talking about the Fed's not lowering, blah, blah, blah. On the bear side, if you get a CPI next month, 3.2, 3.1, 3.0, your bear case is destroyed because then it's like, okay, we're about to hit twos. We're about to hit twos. This time it's for real. And then Fed's going to start lowering right after that, right? Before the real economic carnage starts. So either side can get destroyed so quick in the short term. And then just don't get too confident about the short term, what's going to happen here or what's going to not happen here. Just kind of focus on the long term for your companies, what you're looking at, what you're excited about in regards to these companies, and let, the rest of the people that want to play this overconfidence game, let them play that game overall, folks, okay? Now, pin comment down there. That's an application to get access to all my best courses ever. My Become a Master Stock Market course, financial statements and stock market mastery, high-level company analysis series, exclusive videos each week from me in my private group, portfolio management, my stock options mastery course, understanding stock market terminology, the Millionaire Playbook. You get access to all that when you join my private group, as well as our Discord community as well. We got it was a beautiful review I was reading this morning from a woman in the private group, and she was talking about how much her confidence has gone up since she joined the group, and that's what it's all about. Like, all those course curriculums is to get you to a very high level in regards to your confidence. So when you go to make your own investment decisions out there, right, you feel confident when you go to buy that stock and that stock and that stock, and you're doing your own things because you're like, I understand income statements, balance sheets, cash flows, PE ratios, all these different metrics that are thrown out there, right? How to look at these business models and whatnot from somebody that's, been doing this for a long time. So that will be pinned comment down there. Fill out your application. We'll see if we can get you in there later this week or next week. Much love as always, and have a great day.